Hello, welcome back to DanTrades Mentorship. Today we'll be talking about candlestick patterns, basically the Japan candlestick patterns, and we'll be starting very soon. So sit tight. Okay, so welcome back. So we'll be talking about candlestick patterns today, as usual, with our chat. Candlestick pattern are basically the Japanese candlestick theorem. Let's start with that. So patterns. Candlestick patterns are one of the most powerful trading concepts. Yes, they have meanings to every candlestick you see on the chart. Last week we that was talking about candlesticks. I showed you the candles, the buy, the open, the close, the low. If you haven't watched that video, go into the comment section. You should see it down there on the video area. You should see the video hovering on your screen so that you can watch that video back. So basically, yes, every candle has a meaning. As I said last week, I told you every candle tells a story. Every candle on your chart tells a story. You have to be able to read them out. You have to be able to know what the candles are saying. So yeah, that's basically it about the candlestick. But what the Japanese are saying is there are particular patterns that show what the market wants to do. When you see these particular patterns or these particular drawings on your candle or on your chart, you should see something happen. So yes, basically they are saying that candlestick patterns are one of the most powerful trading concepts that's by the Japanese. They are simple, easy to identify, and very profitable setups. And research has confirmed that candlestick patterns have a high predictive value and can produce positive results. Yes, over the a long period of time, people have been using candlestick patterns and they are working for them really well. So that's basically what they are saying. It can yield positive results. Now, the first one is engulfing bar candlestick. As the name says, engulfing, getting bigger than the previous candle or getting bigger than your previous result. That's what engulfing means. If you check on the internet, if you check from Google's definition, that's what engulfing is. So, what's engulfing bar candlestick pattern? It's one of the most powerful and reliable reversal patterns in technical analysis. Now, whatever we are doing is technical analysis. We have fundamental analysis also. We'll be taking over fundamental analysis in weeks to come, so you have nothing to worry about. You have technical and fundamental analysis. So it's a signal. It signals a potential change in market direction and it can appear in both uptrends and downtrends. So if it can appear in both uptrends and downtrends, that's basically telling us that we have two types. We're going to have a bullish engulfing pattern and a bearish engulfing pattern, basically. So what's our bullish engulfing pattern? As I said, it's always going to be bigger than its previous candle. The bullish engulfing candle is always going to be bigger than the previous candle, or the bearish engulfing pattern is always going to be bigger than the previous candle. So look at this diagram you have here. You have a little black candle. You are using black and green. The black is showing for sells and the green is showing for buys. So basically we have the green candle engulfing the previous candle, or is getting bigger than the previous candle. So this appears in a downtrend. The downtrend is very important. That's for the bullish engulfing pattern, and signals a possible reversal to the upside. So it engulfs the previous reverse or previous opposite candle to the upside. That's what the bullish engulfing candles. And when it's doing that to the upside, it's going in increased volume. It's not going with the same size. It's going very large, very huge. So the first candle is bearish. Of course, the first candle is going to be bearish. It can be red or black, pertaining what chart you have or what you have on your chart, what colors you've configured on your chart. Then the second candle is bullish. That's green or white. You select the colors you want. I've showed a video on how to navigate your trading view. The name of the video is Applications Part 1. DanTrades Mentorship Applications Part 1. So you can go to the playlist and look for it and try to look over that video again. You understand every single thing about trading view and MT5. Part 1 and part 2 talks about MT5 and trading view all together. So the second candle is bullish, green or white. Yes, as I said, you can configure the color you want. It's all in the video. Get time and go through that playlist and look for the application video and completely engulfs the previous candle's body. Now look at this image right here. You can clearly see it's engulfing it. This is the first image. This has engulfed this one by almost 2. He has engulfed it by almost 2. You can see that the size for that is almost 2 times the size of the black candle. That's telling you that it has been engulfed by a higher percentage. So what this means that initially sellers were in the market, but buyers are not happy this time. Sellers have been in the market too long, so now we want to take over. We are ready to take over. That's what most of the time engulfing candles tell us. But not every engulfing candle is an engulfing candle. You can't take every engulfing candle to be an engulfing candle. But what's the story engulfing patterns are trying to tell you? If you get to an area where you have um, um, a tendency to buy, or you want to buy in an area, these engulfing patterns can help you say, okay, now actually buyers want to actually get into the game. So let's come together and work something out. Now let's take a quick look at this on trading view and look for some engulfing candles. Now look at this. Very easy to spot. Engulfing candles are very easy to spot. Look at this order block here. We can call it an order block. I said order block is the last candle before an impulsive move down. Look at this order block. It had an engulfing candle after it. Look at the body of the order block. This is the body of the order block. And look at the engulfing candle. Very huge. Let me zoom in so you can see it very clearly. You see, I'm even making it a little bigger. Look, you can see it is 3 times or 4 times the size. The opposite candle is 3 times or 4 times the size of the engulfing candle. So if you wanted to buy, if you wanted to sell around this area, this alone could have given you a confirmation to say, okay, sellers are actually ready to be in the game. Sellers are tired of buyers bossing them around, so we are ready to enter the market. We are ready to actually place a trade on our side or go on our direction. That's basically what's happening. So that's it about. Let me delete this. Delete. Okay, so that's it about engulfing candle. Let's look for another one. You can choose this as an engulfing candle. Look at this area. Maybe you wanted to sell around this area. You've been waiting for a confirmation, and this print and this big candle to the downside print. Now the body of it is almost 3 times the engulfing candle's body. That should give you a confirmation that we are ready to sell. So with that, whatever pattern or whatever position you want to place at the low, put your TP at the high of the candle, and look for your 1:2 or your 1:1 whatever, wherever you want it to get to, you do that. And I think this is giving you like a 3.3 RR trade. If you look here, it's giving like a 3.33 RR trade. However you want to do it, but the candle patterns just give you confirmations. Don't rely on just the candle pattern by saying, okay, because you saw this here, that's going to be working out. An example is this. Look at this area. This, someone can see they've seen this, so they're going to take it as their candle, and the price engulfed it. Now you're going to say you're going to buy or you're going to sell from this trade or something. It's going to fail you. It's going to fail you very bad. So you don't just pick anything. You should have your trade set up. You should know where you want to buy your trade or where you want to place your trade to. Then you use the pattern as a confirmation. I hope people get that. If you have any question, drop it in the comment section. I'm here for you. I can reply, so you have nothing to worry about. Also, hold on. Okay, so I was having a little issue. We can continue with with what you want to do. Okay, so we can continue. Bullish engulfing pattern. The next thing will be the bearish engulfing pattern. Bearish engulfing pattern. Bearish engulfing pattern appears in an uptrend and signals a possible reversal to downtrend. It's the same as the bearish, it's the same as the bullish engulfing, but just this time, um, 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 buyers are in the market for a long time, and sellers are tired of buyers just buying all around, just bossing them all around. So what happens? We come inside the position to give a possible reversal. The same thing. The first candle is bullish, is green or white. You know what I see. You can check the transitioning on the playlist. You can check how to change the colors and all. The second candle is bearish, black, because this is an bearish engulfing pattern, and this indicates sellers are taking control of the market. It's quite simple. You don't just use it normal, you use it as a confirmation. Use it as a confirmation. Okay, so that's it. Then hold on. We're having a little issue. Hold on. Okay, so we can continue with that. So that's the bearish engulfing pattern. Appears in an uptrend and signals a possible reversal. So as I said, let's take a look at trading view. An example on trading view. Bearish, 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 bearish. Okay, so even my definition I was showing for the first time, I showed bearish instead of bullish. So let me reminded me in the comment section. The chart is loading. The chart is loading. The chart is loading. Our chart is loading. Our chart is loading. My video for trim a lot. Okay, so a bearish engulfing candle. I'm looking for a bearish engulfing candle. Bearish engulfing. Okay, this is one. This is a bearish engulfing candle. This is a bearish engulfing candle. So yeah, you can see this beautiful candle right here. It engulfs. This is the last black candle, and the blue candle engulfs it by almost two. It engulfs it by almost two. So that's a bullish engulfing candle. I made a mistake to show a bearish engulfing candle when I was showing the bullish one. So that's how it looks. That's how the bullish one looks over the chart. So yeah, so that's a bullish engulfing candle. So we can continue with our session. The next thing we'll be talking about is the doji candle. This is my favorite candle. This is my favorite candle in the Japanese candles, because it signals there's no one control of the market, so you can get some time to actually think of what you want to do with your trade. As I said, all of them are chart patterns. They are confirmations. You don't jump into conclusion and say you saw a doji candle, so you want to just place a trade to the opposite side. No. So doji is one of the most important Japanese candlestick patterns. When this candlestick forms, it tells us the market opens and closes at the same price, which means there is equality and indecision between buyers and sellers. There is no one in control of the market. So imagine 50 sellers and 50 buyers enter the market. Now there's going to be indecision, because we don't know who is stopping who, because there are 50 buyers with the same position, 50 sellers with the same position. We are going to cancel out. So meaning at that particular instant, we don't have buyers, we don't have sellers. That's when the doji candle forms. When the candle starts, buyers are going to buy to a point, sellers are going to sell back to the main point, and it cancels out and it forms a doji candle. So this is basically how a doji candle looks like on the chart. I saw one when I was drawing the first um, if I'll see a doji candle on the chart, a doji candle, okay, this is basically a doji candle. This something like a doji candle. You can see how the wick to the upside is equal to the wick to the downside. This looks like a middle candle with no one really showing if they want to go up or they want to come down. This is actually a sell candle, but a doji candle is similar to this. So this can be a doji candle. This, you see, it has a similar length to the wick to the downside. Let me get a circle for you. It has a similar wick to the downside and a similar wick to the upside. So the body is basically in the middle of both the body is basically in the middle of both wicks. That's how a doji candle looks like. This can be classified as a doji candle, and this can also be classified as a doji candle. This can also be classified as a doji candle, but just that this one you have a longer wick to the upside and a shorter wick to the downside, so it's not really going to help that much. But look at what I'm saying. Doji candles help you know what you want to do in the market. Maybe you wanted to sell here. The doji candle is telling you that sellers and buyers are now equal. So initially buyers were more until this doji candle formed, and you realize that okay, buyers have stopped going to the market and sellers and buyers are now equal. It signals a reversal. So you're ready that okay, now it means if first buyers were 100 here, when they got it now they are 50, sellers are 50. What does it mean? They are reducing, meaning the next candle is definitely going to go against them. So now buyers are like 20 and sellers are like 70. So you have a big engulfing candle. So all these could be part of your confluence, an engulfing and a doji and an engulfing candle. You see, all this can be part of your confluence. So yeah, all this can be part of your confluence. So that's basically it. Um, the next thing, so that's an example of a doji candle. Now let's continue. Dragonfly doji. Now we have different types of doji. We have a dragonfly doji. It's a bullish candlestick pattern. Yes. A dragonfly doji is a bullish candlestick pattern. What is this one trying to see? So at a point, sellers wanted to sell lower. Sellers wanted to sell lower, but buyers were not ready. Price was selling, price was selling, price was selling. Sellers wanted to sell lower, and buyers said no. They are not going to allow you sell lower because it's time for us to actually enter the market. Now note that all these are confirmations for your trade. Don't just look at it and say because you've seen a dragonfly doji or you've seen this type of pattern, you're going to place a trade. You should be ready to do something at that particular area, and this is just going to act as a confirmation for you to place your trade. This is just acting as a confirmation. Don't forget to like and subscribe whilst you're watching the video, very important, and leave a comment. So as I was saying, the dragonfly doji is just telling you that we were selling to a particular point. Buyers are not willing for sellers to continue anymore. So maybe there were 50 sellers initially and 50 buyers came back into the system. It's going to bring the sellers back to break even or back to wherever they started from, because now you have 50 sellers, you have 50 buyers, they're canceling each other out. Yes. Then price initially continues to move up to the downside, to the upside. Price can continue moving up to the upside or just end wherever it is. So this a visual representation of a doji or a dragonfly doji. Now on the chart, I think we saw one on the chart when we're identifying the dojis. I saw one around this area. Good. This is a dragonfly doji. This is something like a dragonfly doji, but in this case it's not being for a bullish scenario. So let me show you what I'm just showing you the visual representation. Let me show you how it looks when it's for a bullish scenario. So look here, look at this beautiful candle at this area. Fill, turn off my fill, 35 to transparent. Good. Now look at this candle here. Initially price was selling, it was selling, buyers bought a little, and price continued selling to the downside. Now, after this, buyers were like, why should we allow these people to continue selling? No, we can't agree to that. So buyers came back into the market and pumped the price to this area, and market closed. So it created a dragonfly doji, signaling a possible reversal to the upside. Then price it what? It distributed to the upside. So they are all for confirmations. You already want to buy. It gives a print on your chart. You are ready for the confirmation. It means that's confirmed whatever you want for you. That's what we use them for. You don't just see it on the chart and buy. You need it as a confirmation. This is another example of a dragonfly doji. Price sellers came down to a particular price, and buyers took control over to the main price. But unfortunately, sellers came back before buyers came back with momentum to move to the upside. Yeah. So that's the dragonfly doji. Please pay notes to it, pay attention to it, try and go over them on your trading views. I hope everyone has their trading view ready. Try and go over them on your trading view. Very, very important. Now, the next thing is basically the gravestone doji. Now, the gravestone doji is basically the opposite of the dragonfly doji. The gravestone is the opposite of the dragonfly doji. So in case you're in a buy scenario, the same thing goes. And the buy scenario, buyers bought to a particular price, sellers got angry or were tired of buyers being the controllers of the market, and they entered and sold everything to the downside. They sold every single thing to the downside. So what happens then? Since you're selling to the downside, we are signaling a possible reversal. We are tired of buyers. We are tired of buyers taking control of the market. We are tired of buyers taking control of the market. So we are ready to signal to the downside. So what do we have here? The gravestone doji is the bearish version of the dragonfly doji. It is formed when the open close are the same or about the same price. What differentiates the gravestone from the doji is the longer upper tail. So the dragonfly doji has a longer lower tail, signaling that it wants to go to the upside, and the gravestone has a longer upper tail, signaling it wants to go to the downside. So as usual, let's look at how it goes on our chart. Very beautiful pattern, how it goes on our chart. We should have some around. This is one, this is one, this is one of them. This is an example of it. And as you can see, you have this beautiful candle, and price was moving to the upside. Buyers got angry, reversed everything to the downside, and you have a beautiful gravestone doji. Now, the only reason why someone might not consider it as a beautiful gravestone doji is because of the relative longer tail to the downside. Now, you don't have to completely get a short tail. It does not mean you should get a short tail. Once your upper tail is longer than your lower tail and it's having a small body, you can consider it as a doji, which is either a gravestone doji or a dragonfly doji. Now let's go over a quick recap. This with a longer tail to the upside is signaling price went to the upside and now price is ready to reverse to the downside, meaning that that's going to be called a gravestone doji. Wonderful. I've seen something very interesting. Look at this. This this candle here. This big candle here. This big candle here can be classified as a dragonfly doji. This candle can be classified as a dragonfly doji because it has a longer tail to the downside. It has a relatively small body as compared to the tail, and has a relatively small wick to the upside as compared to the tail. So this can be classified as a dragonfly doji. Now it's going to show where you met it at. If you met it at a place you wanted to actually buy, then you can classify it as a dragonfly doji. So you have to know where you are referencing your patterns from. If it was in an area you wanted to actually buy, you're using it as a confirmation. Don't just look at it and say you want to buy. So somebody might say they saw this and they wanted to buy and just put a play. They just place a trade on top of it, put their stop loss at the wake, and go and look for maybe 1:2, because that's what we mostly do on the DanTrades mentorship. It's 1:2 we do. unfortunately, you are losing the trade because you just looked at this. You just use that as a trade. No, that's a confirmation. So that's the recap. We know what a doji, a dragonfly doji is, and what a gravestone doji is. As simple as that. Okay, so we can continue. Morning star pattern. So initially I said my favorite was a doji, right? Yeah, it's still my favorite. But morning star pattern is also very interesting. Let's learn what this is. So the morning star pattern is considered as a bullish reversal pattern. It's like an engulfing pattern, but in a much smaller process. It's basically like an engulfing candle, but in a much smaller or slower process. So basically, you're going to have your bearish candle as usual, but the bullish candles that are going to want to engulf it will come with smaller candles. Sometimes you can have one smaller candle, then after you have an engulfing candle, you can have a doji before you have an engulfing candle. It comes in different ranges, but the morning star is very interesting. The morning star is a higher confirmation than just following the doji and the engulfing. That's the reason why it's the third to the list. It's coming after the doji and it's coming after the engulfing, because the engulfing is just a confirmation straightforward. A doji is also a confirmation straightforward. But if you have a doji and an engulfing, that's like a maximum combination. Like that's a combo to whatever you are doing. So this is how the morning star looks like. As I said, it's a bullish reversal pattern. For the morning star, we have evening star, we have morning star. The morning star is a bullish reversal pattern, and the evening star is a bearish reversal pattern. We can take a look at how they look like on the graph, on the chart graphically, and we'll have a look at however it is. Now look at this beautiful example. Now you see price was selling to the upside. So this will be our first candle, our first opposite candle. This is an example. What we are doing right now is an evening star, because the evening star is a bearish reversal candle. Now look at this beautiful candle here. It got here, but after it created a gravestone doji. It created a gravestone doji here. After the gravestone doji, it gave us a bearish engulfing candle. So you see what I was saying? We could have gotten only a bearish engulfing candle, which is going to be a confluence but not that deep. But having the doji or the gravestone doji and the bearish engulfing candle gives us a top-notch confluence. So with this, you can place your trade wherever you got, then look for your 1:2 on your trade 1:2. Unfortunately, you're going to hit your stop loss, yes, because as I said, you don't just place a trade anywhere. They're supposed to act as a confirmation. They're supposed to act as a confirmation. Now imagine maybe you went to your chart and you wanted to sell at this area, and you see this morning star pattern. You see this morning star pattern. So the first one, this is going to be your opposite candle. Now somebody will say, why that's going to be my opposite candle? Look at this candle very carefully. This is a doji, but what type of doji will it be? The upper wick is longer than the lower wick. The wicks are the most important part in identifying what a doji is. The upper wick is longer than your lower wick, and the body is smaller as compared to the upper wick and the lower wick. So this is going to be a gravestone doji for you. So this is where your gravestone is starting from. Or you don't have to keep it in your head like that. You can visualize it like this. Price opened here. Price went as high as this. And sellers were like, we are tired of you being in the market for long. And sellers returned them to this place and price closed. Sellers then engulfed the candle next. So what do? If it's a confirmation for you, if that's an area I wanted to sell, you can put your entry here, your stop loss on top of the candle, and aim for your 1:2, and voila, you lost the first trade. But okay, you didn't lose the first trade because I don't know if that place was actually going to be somewhere you wanted to actually sell. But let's say you lost the first trade, the second trade you win it, and you've recovered the loss you had the first time. As simple as that. As simple as that. So that's the morning star. You have the evening star, Okay, someone is saying I should amplify my voice. We have the morning star, we have the evening star. That's basically how they look like and how to use them. So I've explained what the evening star is. The evening star is the same as the morning star, just that you're going to have something like a doji before you're going to have an engulfing candle. It could also not be a doji, it could also be just a small candle, but they are basically saying the same thing. If you have a doji, it even makes the confluence even far better. The hammer. The hammer. Now, people might confuse the hammer and